Hello there and welcome to Business 24 on iBrandTV, Nigeria's leading online channel. On Business 24, we talk about business dynamics. And on this very episode, we shall be talking about venture capital. By the way, I'm Michael Nath, your host on the show. And right here in the studio, I have my namesake, who by profession is a chartered accountant and a finance analyst, in person of Michael Olayinka. Michael, you're welcome to Business 24.
It's my pleasure to be here.
Yes, and we're glad to have you here as our guest today.
Same here. I'm also happy to be here.
All right. Right away, we're going to take a break. When we come back, we go straight to business, starting with Michael's thoughts on some business-related stories in the papers.
Oh boy, winning you was so easy.
I just couldn't stand those your powerful shots. That's what happened.
Really? Let's go to my place for dinner.
This fufu is so nice.
It's through unripe plantain flour.
True unripe plantain flour is delicious.
Yes, true unripe plantain flour is what I serve my husband for swallows. It's easy to prepare, fortified with vitamin A, low in sugar and cholesterol, rich in fiber that helps the heart, builds and strengthens the bone, and his energy level is boosted.
Through unripe plantain flour, no additives, 100% natural, a product of Pali Agro Products Nigeria. Through unripe plantain flour, available in all leading stores nationwide.
You're welcome to Business 24 here on iBrandTV. And right away, we are bringing you the top business stories on some of Nigeria's dailies. From Energy Times, we have federal government's mass metering runs into hedges as customers' apathy holds back fresh 3 million meters. These codes now beg customers for collection. Customers kick, say the process is too cumbersome for illiterates. And phase 1 kickoff of May suffers. And mass metering project not impressive. This is coming from Senate. Still from Energy Times, we have ADM invests $1.3 million to acquire 51% stake in OML 141 and gas supply to power plants equivalent to 3,445 megawatts in February. This coming from NNPC. OML 11 Lake Oil earns $10.3 million from 2 months oil lifting. And we have also OPEC Plus raises oil supply from May to boost economy. Finally, from Energy Times, we have NNPC reduces cash call debts to $1.570 in February. And now from Business Day, we have one major headline there, which is 612 microfinance banks may close shop over recapitalization, with a rider there as first threshold deadline ends this month of April. Now to you, Michael.
Okay.
The one that really captures my fancy there is 612 microfinance banks may close shop over recapitalization. Comment, please.
Okay, so it is part of the regulatory and supervisory role of CBN in order to protect the bank microfinance customer, any bank customer, that the bank will have a certain amount of money. In the case of this microfinance bank, is currently at 35 million, the second tier microfinance bank, and the first tier is about 200 million capital reserve requirements. So, and as the bank customer grows, bank deposits also grow. So it is important for CBN to review this capital reserve periodically, because if you have it at peg it at 35 million 2 years ago, their customer base has increased, and the essence is to be able to, in case any of these banks fail, in conjunction with the Nigerian Deposit Insurance Commission,
Yes.
be able to at least pay some of the customers so that their money will not go like that. Currently, the maximum you can get is 50,000 naira if you have a deposit in a failed bank. Even if you have 5 million naira, it's 50,000 naira. So if after settled all the customer, they still have some amount left, probably they will consider customer who have a high value deposit. So when CBN come up with this new capital bills, if any bank that cannot meet up will probably, have to close shop. That's exactly what they are saying here. But what bank usually, microfinance, what they usually do is either consider merging with another microfinance bank and form a single bank, and they will have a single.
It's a stronger financial
base, and of course their capital base will still remain 50 million as a single microfinance bank. So
how efficient are these microfinance banks? Most of them have already closed shop.
The challenge is that even the so-called, it's not all the microfinance banks that you see around that are actually registered with CBN. There are a whole lot of them that are not registered with CBN. They just call it, they just those who does daily contributions transform into microfinance bank. So that's why you see them coming out this month, and the next month they're out of business. So but for those that are actually registered, they know how much they have a certain capital base with CBN, so you can't just open for you to close in 6 months. So for those that are genuinely that are registered with CBN, they are doing well, and they are still in operation. Even though I always maybe I should not say this on here, I always discourage business owners, small business.
Yes.
I always discourage them from approaching microfinance bank for loan, because microfinance bank loan is deceptive.
Really?
And the reason is that, for example, if a commercial bank will give you a loan for, say, at 12, 20 or 15%, microfinance will say, we are giving a loan at 4%, 5%. Meanwhile, commercial bank gives you loan on annual basis. Their rate is on annual basis, and it is on reducing balance basis. That is, if you take a loan of 1 million, and the first month you pay 100,000, the 12% will be charged on the balance. But microfinance bank will give you loan. Their own is on monthly basis. So at the end of the day, if you take a loan for 1 year, you are paying
based on the capital.
It's based on the capital. Wow. So you are paying like 60% of whatever you are paying, and they've throw 5% to you, and you think you have you are getting a very low rate interest. Meanwhile, you are actually paying more than what would have paid if you have approached a commercial bank.
Thank you very much, Michael. I'm going to come back to you shortly, but it's very important we go this way. This is iBrandTV, and you're watching Business 24. Our focus on this episode is venture capital. Venture capital, VC for short, is a form of private equity and a type of financing that investors provide to startup companies and small businesses that are believed to have long-term growth potential. Well, venture capital generally comes from well-off investors, investment banks, and any other financial institution. However, it does not always take a monetary form. It can also be provided in the form of technical or managerial expertise. Venture capital is typically allocated to small companies with exceptional growth potential, or to companies that have grown quickly and appear poised to continue to expand. We are going to learn about what venture capital is all about, as Michael Olayinka, who is still very much around here with me in the studio, leads us through. Now, Michael, I'm coming back to you. What qualities are investors looking for before they can provide a capital venture for a startup business?
Okay. Before I even venture into your question,
Okay.
I would like to probably educate the audience about what actually inform a business from approaching a venture capital.
Okay, that's a good one.
Okay, so investment industries is of two type. We have traditional investment, and then we have alternative investment. Venture capital happen to fall under alternative investment. Why traditional investment is what everybody knows. Traditional investment is your fixed income, your bond, your debenture, your commercial paper, your equity, the share that you buy and all that, the bond and all that.
From the banks.
From the bank. So the reason why the alternative investment is venture capital, which is provided by a private equity company, is an alternative for some business. Is because a business that is not listed on the stock of exchange is difficult for them to raise fund. You know what the capital market does? Capital market ensure reallocation of fund, the idle fund, from the idle sector to the most efficient sector where the fund will be efficiently utilized, and then add a consideration which could be interest or dividend to the provider of that fund. So it's a win-win to both sides. So the capital market ensure that, okay, you have money, you don't know what to do with this money. Okay, so bring the money for a certain interest, for a certain promise. It could be, okay, you will pay a dividend when we make profit, okay. Or if it is a fixed income bond or likes, or fixed income stock, a certain interest will be a promise that, okay, if you can, release your money for a certain number of months, you will get a certain interest on it. So for unlisted company, for small company or startup company, they don't have what it takes to approach the capital market where they can easily raise fund. For example, we back in the days, maybe before the financial crisis of 2008, you will see that a lot of banks, especially when there was a recapitalization like this, yes. A lot of banks went into a stock market, they raised funds, they sold their share, and it was easy for them to do that because they are listed a company. You can easily approach the Nigerian Stock Exchange. Some are even listed in more than one stock exchange. Some are even listed in New York Stock Exchange and other part of the world. So it's easy for them to raise funds. But for a startup company or for a private company, it is difficult for them to do the same. So for them to now and then, any company that wants to grow, you would definitely need a third-party capital injection. You can, if you want to grow based on what you have, you are limiting yourself because the growth opportunity always come. So when the growth opportunity come, and you for sure you might not be able to venture into it because of the limited funds. So you need to look for fund from elsewhere. Okay. Now for venture capital, before a venture capital can extend or give fund or investing in a startup company.
Yes.
There are three stages or three approaches or three funds that venture capital provide for a startup company. There is one we call angel fund.
Angel.
Yeah, angel fund.
Okay.
And it is for somebody, a company that are yet to be formed at all. So you have an idea, and then you have done your business plan.
So that is possible.
It's possible.
A company that hasn't.
It has not been formed.
Wow.
It has not been formed at all.
Isn't that a big risk?
It's a big risk. Venture capital, that's why alternative investment is an highly yield investment. That is, the interest interest is always high, because of the risk that is involved in it. So
the higher the risk,
the higher the yield, the interest or whatever you have to get. So so for angel investment, angel fund, what they do is, you have an idea, you sold it to a venture capitalist, usually an investment bank. There are some asset management companies that are into it, and there are some high-end individuals that are, well to do, that also, invest in such a company. So you will say your idea, they look at the idea you have, and they will, do their own due diligence. They will study it, and they will see if it is something they feel, okay, this is a very good idea, it's going to, translate into a viable business.
Yes.
They will give you money. Then it could be at the point where you have actually registered your company, you have started, but you've not even started operating.
Okay.
So
and what is that one called? The first one you just treated.
Yeah,
is angel capital.
Angel capital.
Then
the second one, I'm not sure. I'm
not devil's capital.
Exactly, it's not devil's capital. So it's another stage that venture capital. I've actually forgotten the nomenclature. So at that stage, you need fund to go into production. You have started, you've set up your company. Probably the factory is even ready, but you need money for raw material. You need money for logistics. You even need the money to put the name of the company outside there.
Wow.
for advertisement and all that. So you approach the venture capitalists, and then they assess and evaluate the business process and all that. Which environment are you going to be operating? Of course, your business plan will contain information as regards to cash flow. It will also contain information as regards to the operation and all that. And if we can convince them, they will go ahead and then extend the fund to you. Okay, so then the third one is for a company. The company is already doing well. Yeah, fully established company. They are operating. They are doing well, but they need capital for expansion. And you must have it at the back of your mind that these are companies that are not big enough to be listed at the stock exchange. These are companies that have that restriction. So you could have even a big company. For example, if you look at Earth Plus. Okay. So if I want to discuss Earth Plus on this program now, no, you won't. no. I'm just saying, if you want to talk about that, the case, what happened to Earth Plus, of course, it's going to be another program. Okay. So it has to do. It's something that relates to what we are discussing. All right. For example, Earth Plus approach a venture capital. Earth Plus is almost everywhere, but they still need money for expansion. And a venture capital was approached, and they promised to give them to invest up to $18 million. They've made resuscitate the company. This for expansion. Okay. It's for expansion. The company that you are saying you want to resuscitate. In this case, the company is doing well, is booming the business. So they just want to cover more. As at the last count, they have about 17 or how many branches all over Nigeria, including Lagos and FCT and all that. So they're already doing well. They are known everywhere, but they need to cover more grants. So in doing that, they need more money. Yeah. They need funds to do that. So for further expansion. For further expansion. So they approach a venture capital, and of course, before you can approach a venture capital, you need the investment company to serve as an intermediary, because they need to package you, they need to present you in a good light, in a light that will be attractive to a venture capital. Yeah. You can't just say because you are known or something, and because of that you want to you want to approach venture capital yourself. No, you probably do that through an investment company, or there's some consulting company who does that. So in this case, at the end of the day, they've released about $10 million to them already. So for expansion, even though they have a certain issue that I will not discuss here.
No.
You get. But due diligence must be done from both sides.
Okay.
That's why it is important for the company who is also requesting for the fund to engage professional, to engage consulting firm who can help
as an intermediary
between them and the venture capital, because venture capital can be smart. They are interested, especially when they know that the business is lucrative, and the value of unlisted company cannot be already estimated. You can't tell for example, now I can tell you the value of Dangote Cement. All I need to do is to look at their share price in the stock market, and what is
it's out there for everybody to see.
But for those other companies, it is almost difficult for their value to be estimated.
Okay, thank you very much, Michael. I'm not yet done with you. I'm still going to come back to you. For now, we're going to take a breather. When we come back, we're still going back to Michael to answer some more very crucial questions.
Most people don't understand the magic of a perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products, from spa to spa. Looking for that ideal solution. I found the solution. And it's Blemiville Skincare and Spa. My name is Neil, and I'm proud to be a part of the Blemiville family.
You're welcome back to watching iBrandTV Business 24, and I still have with me here in the studio chartered accountant and financial analyst in the person of Michael Olayinka. Michael, I'm back to you to put finishing touches to what we've already started. Now, what advice, as an expert in business, what advice would you have for startup business owners? That is on the one hand, and on the other hand, venture capital investors.
Okay, thank you. My advice for startup business owner is, number one, before you can, approach a venture capital for fund, you need to package your company. You need to, engage. Like I've said earlier, you need to engage a consultant. It's not something you can do on your own, because of course, you know how to package your company, to present your company in a very good light, and to show what the venture capital needs to see. They need to see that, okay, the company has the capacity to generate future cash flow. The company has capacity to, there's no legal or political limitation for the company. So they need to establish that, okay, their money is safe. So you need to provide those information that will give them an assurance that whatever they invest in you, because they are players. They are also investing to make money. They invest. They usually invest, and they leave their investment for a very long time, up to 4 or 5 years. venture capital investor, of
yes.
course, like I said from the end of the business, the business is also, they also package their business, in a good light, and also to most of the business, they overvalue their business, and because the value is not readily available, like a listed company, they do a lot of manipulation to see that. So there are different ways in which you can, value a company to actually establish the actual value, because the venture capital, they buy into the equity of that company. So it could be a certain percentage of the equity. So the first thing is to first of all establish what is the value of this company, for you to know the value, the percentage of the equity of the company what you are investing is buying from that company. So in that case, there is also need for venture capital to engage professionals too, engage accounting firm to do audits, to do yes.
Just like startup business owners.
Exactly.
Okay.
They do engage a firm of chartered accountant professionals to also review the book of the company they want to venture in,
right.
they want to invest in, to ensure that all the claim made is actually there, because you need to consider the asset, consider the liability. In some cases, you could have where liability has outrun the asset. So what are you even investing in? So you need to establish that. You need to know that the management, they have technical and experience, the skill to run the company, because even if you invest and then the management are diverting your investment to a private use, or they don't have the required skill to run the company efficiently in a way that that the company will grow, and then it will lead to you making the expected return. So it is very, very important to also do a proper due diligence.
Yeah, thank you so very much, Michael.
You're welcome.
We really enjoyed every bit of your playing this role as the guest on the show today.
I've also enjoyed myself.
Thank you very much. Yeah, I've been talking with Michael Olayinka, a chartered accountant and financial analyst. I learned quite a lot, from everything he said, and I want to believe you did the same. More interesting, more things to learn as the programs keep coming your way next time. For now, I want to thank you for being there, because without you there is no us. I'm Michael Nath.